Good evening, everyone. Welcome to another live streaming of basic transfer pricing. Tonight, our topic would be about the United Parcel Service of America, Inc., on behalf of itself and its consolidated subsidiaries, Petitioner versus Commissioner of Internal Revenue, the respondent. No? This is the heard in the United States Tax Court. No? So tonight, our topic would be about the tax-motivated transactions, about sham or fraudulent transactions, and also the case of OPS of America versus the Commissioner of Internal Revenue. No? So yung United Parcel Service of America, yun yung UPS. No? Okay. And shout out, Harry. May shout out na ba? Sige.
Shoutout po ma'am kay Ma'am Rosalina Tune.
Okay.
Maayong gabi daw ma'am from Cebu City.
Oh, maayong gabi eh. Okay.
Siya pa lang ma'am yun.
Sige.
Pero 6 viewers na po.
Okay, so good evening po sa 6 viewers natin, no? And welcome to this discussion on this basic transfer pricing. Actually, parang dumadami na rin yung mga viewers natin that are parang aware na sila, no, on the transfer pricing. They're very aware na talagang kailangan yung transfer pricing. Kasi dati, pag sinabi mong transfer pricing, sasabihin ka agad, ay, hindi namin kailangan yan. But now, paparami na rin. Although, parang kung baga sa product, mahirap pa rin ibenta yung transfer pricing. Although, meron ng mga regulations yung BIR regulating the transfer pricing and also making it mandatory for taxpayers to have transfer pricing analysis report, no? Pero parang mahirap pa rin siyang ibenta dahil ang karamihan sasabihin, hindi namin yan kailangan, no? But it is very important. And tonight, our case is about the tax-motivated transactions. Why we call it tax-motivated transactions? Kasi ito yung mga transactions na ginawa lang in order to save taxes. So there is a motivation in the part of the taxpayer to motivate their tax, no? To motivate underpayment or taxes or tax-saving devices, to make tax-saving devices in order na maliit lang yung babayaran nilang taxes. And of course, dun sa gusto mo na makasave ng taxes, there are some who make sham or fraudulent transactions in order to save payment of taxes, no? So, what do you mean by tax-motivated transactions? These include sham or fraudulent transactions wherein the taxpayer had entered into a sham investment transaction solely for the purpose of claiming tax deduction. So, yun na yung mga tax-motivated transactions na ginagawa yung taxpayers in order to save payment of taxes para mapaliit lang yung babayaran na taxes. Why? Because payment of taxes is very burdensome. Why burdensome? Imagine the tax rate is 35%, no? So, kung meron kang net income na 1,000, 350,000 will go to tax. And then, or 30%, no? 30% sa atin. So, 300,000 will go to tax. And then, 700 na lang yung matira. So, napakalaki na nawawala sa taxpayer. That's why they wanted to save payment of taxes para kakaunti na lang yung mapunta sa taxes. No? Also, what do you mean by sham or fraudulent transactions? Transactions with no economic substance. Gawa-gawa lang. No? Wala talaga siyang substance. Parang sinadya lang siya in order to save payment of taxes. Kaya ang nangyari sa kanya, sham or fraudulent transactions. The deductions claimed by the taxpayer were not allowable because they were connected to the sham transactions, no? Kasi gawa-gawa lang siya, so hindi naman talaga siya totoong transactions, no economic substance. But gawa lang siya na transactions in order to save payment of taxes. So yun yung nangyayari. And we will discuss the case of UPS of America versus the Commissioner of Internal Revenue. Ano ba yung UPS, United Parcel Service of America? No? So, shout out pahari.
Shoutout po kay Sir Ryan Deocades. Good
Okay.
evening daw po.
Okay.
Sila pa lang.
Okay. So, for the findings of facts and opinion in this case, sino ba yung party dito? Si UPS at saka yung Commissioner of Internal Revenue. Sila yung naglalaban in this case, no? Because this is a tax case. And the judge here is si Judge Rui. Okay. So, respondent. Sino respondent dito? Determine deficiencies in petitioners' federal income taxes and additions to tax as follows. Sino yung respondent dito? Yung tax, no? Si petitioner dito is the Commissioner of Internal Revenue or the respondent. Kasi ang nag-appeal dito si UPS, no? United Parcel Service, UPS. No? Okay. So, the deficiency of the petitioner, so UPS here, is for the year 1983, 2,330,687, and for 1984, marami. No, the deficiency is 64,870,674. Meron pa siyang mga additions to the tax or itong mga penalties, no? May 3.2 million, and then may 50% of the interest due na 45 million, and then meron pang under section 6661, 11 million, no? Okay, so what happened in this case? The respondent determined that petitioner is liable for increased interest pursuant to section 6621 as the portion of the 1984 deficiency, no? So ano yung mga issues po dito sa case na to, no? Yung UPS versus the Commissioner of Internal Revenue. Number one issue is whether the amount collected by petitioner as excess value charges or ABC, excess value charges, from its customers must be included in gross income in 1984 pursuant to section 61. So, anong contention ng court dito? We hold that EVC must be included in petitioner's income. Ito yung excess value charges, no? So, kasi income yan pumasok yan na revenue. So, kasama talaga yan, taxable. Number two, whether petitioner is entitled to deductions under section 162 for any amounts paid to National Union Fire Insurance Company of Pittsburgh, Pennsylvania, or NUF, we hold that petitioner is not entitled to those deductions. Ano to? Yung fire insurance, no? Ano ba yung business niya? Yung nagdi-deliver ito ng mga parcels, no? So, bakit may fire insurance? Para hindi masunog yung mga dinideliver na goods, no? But in this case, hindi siya entitled the deductions, no? Disallowed by the court. Number three, whether respondent properly disallowed. Sinong respondent dito? The Commissioner of Internal Revenue. Whether respondent properly disallowed petitioner's deduction of 11.1 million paid to Liberty Mutual Insurance Group Liberty as California Workers' Compensation Premium, no? We hold that the deduction is allowable. Kasi ano to? Workers' Compensation Premium, no? Para sa mga employees. So, it is allowed. Okay. Number four, whether petitioner is liable for an addition to tax pursuant to section 6653, 1 and 2, for negligence or intentional disregard of rules or regulations for the tax year 1984, no? We hold that it is. So may ano pa siya, yung parang violations, no? Number 5, whether petitioner is liable for an addition to tax under section 6661 for a substantial understatement of tax for 1984. So may under declaration. Sabi ng court, we hold that it is, no? Number 6, whether petitioner is liable for an addition to the number 6, whether petitioner is liable for increased interest, no, sa interest naman, on substantial underpayment attributable to tax-motivated transactions. So, yun na. Pagdating kasi sa mga tax transactions, makikita talaga kung ang ginagawa ng taxpayer is tax-motivated transactions, meaning for the savings of taxes. No? Kaya ginawa nila intentionally in order to avoid payment of taxes. That is under Section 6621 for 1984. Sabi ng court, we hold that it is. No? Some of the facts have been stipulated and are so found. The stipulations of facts are incorporated herein by this reference. At the time the petition was filed, Petitioner was a Delaware corporation with its principal office in Atlanta, Georgia. Okay, so ito na po yung findings of fact. Kasi sa findings of fact, dito mo makikita kung ano ba talaga yung ginawa ng taxpayer, no? Sa findings of fact. And sa mga cases na ganito, factual talaga. Hindi yun yung mga assumption lang, no? Bawal yung mga assumptions dito. At saka sa tax case, factual talaga kasi may mga documents that you are going to submit, no? So, findings of fact for the UPS or United Parcel Service. So, Petitioner is the largest motor carrier in the United States with a principal business consisting of the pickup and delivery of small packages and parcels. So, yun yung ang UPS. Number 1 siya sa Amerika. 1983 pa to, 1983. Siya yung nangunguna. So, during 1983 and 1984, Petitioner conducted its business through wholly owned subsidiaries in the United States. Wholly owned subsidiaries meaning mga parang branches niya or siya pa rin yung may-ari, no? Canada and West Germany. Petitioner United Parcel Service of America, Inc. or UPS had several wholly owned subsidiaries including United Parcel Service, Inc., New York, UPS New York, United Parcel Service, Inc., Ohio, UPS Ohio, and United Parcel Service General Services Co. or UPS General Services. UPS General Services provides management services to affiliates of UPS. No? So UPS New York provides ground delivery services in the eastern region of the United States. UPS Ohio provides ground delivery services in the central and western region of the United States. Within the United States, Petitioner generally provided statewide, intrastate service, and interstate service between all points in the states and the District of Columbia. So, sa District of Columbia po sila. Another subsidiary, UPS Air, provided air delivery service for packages traveling partially by air. Dati mayroon pang UPS din dito sa Pilipinas eh. May mga forwarders din sila dito, no? Di ko lang alam kung ngayon meron pa. Petitioner had 62% operating districts in the United States, no? So marami. Each district, imagine na 1984 pa ito na case. So in that time, mayroon na siyang 62 operating office, no, districts. Kailan tong ano na to? 1999, no? 1999. Okay. So, Petitioner had 62 operating districts in the United States. Each district had an operational and administrative staff, and a manager was responsible for all district operations. The district manager reported to one of 11 regional managers. No? Imagine that, who in turn reported to the corporate headquarters. No? So, ang ganda na ng ano nila, organizational structure nila at that time. Generally, its package picked up by a UPS driver is delivered to a package operating center. So, ganda na ng setup nila. At each center, packages are unloaded from package cars unloaded onto trailers, which hold the packages either directly to another center for delivery or to a UPS sorting hub. No? At the hub, packages are sorted by destination. So, this is how they operate. No? Loaded back onto trailers and hauled to the appropriate center where they are loaded onto package cars for delivery. Packages traveling by air are sorted at an air hub and transported to the center for delivery. So, ganyan sila nag-operate. No? Next is the shipping rates and tariffs. So, ito na yung paano sila nagkaka-income, no? Yung charges nila. As a domestic motor common carrier, Petitioner was regulated by the Interstate Commerce Commission, no? So ICC. Petitioner's intrastate service was regulated by state transportation agencies and public utility commissions. So yun yung mga government agencies na nagre-regulate dito sa services nila. As an air carrier, Petitioner was regulated by the Civil Aeronautics Board. No? So yun yung mga agencies of the government that regulates the services of this UPS. No? So the ICC issued Certificate of Public Convenience and Necessity as evidence of the carrier's authority to engage in transportation as a common carrier by motor vehicle. So yun yung permit nila. UPS New York and UPS Ohio, it's filed tariffs and tariff supplements with the ICC. No? So the ICC tariffs and tariff supplements contained provisions which governed the rates and services offered by petitioner to its shippers. The tariffs filed with the ICC by UPS New York and UPS Ohio, which were in effect during the years in issue, contained, among other things, provisions relating to the scope of operations, damage, and unclaimed property, methods of determining rates, and filing of claims. With respect to the scope of operations, the tariffs for both UPS New York and UPS Ohio provide. Oh, so ito yung tariff. Rates and provisions named in this tariff or as amended are limited in their application to the extent of the operating rights set forth below. The provisions of the tariffs govern the rates and services offered by petitioner to its shippers. Oh. So the ICC tariffs filed by UPS Ohio and UPS New York were similarly filed with the State Transportation Commission of most of the states. So, individual state filings were required in the states of California, Hawaii, Nebraska, Oklahoma, and Virginia kung saan sila nag-ooperate. No? So whenever UPS Ohio or UPS New York made a change to its tariff, a tariff supplement was filed with the ICC. No? Kasi regulated sila ng ICC. Okay, so pre-1984, exist value charges. Petitioner, excuse me. Okay. Excess value charges. May, may shout out? O sige, shout out muna.
Shoutout po kay Ras Painter. Gandang gabi daw po.
Okay, good
Pati
evening.
po kay Ma'am Esperanza Salom.
Good evening.
Good evening daw po. Pati kay Ma'am Chona Moyko from Lapu-Lapu City.
Wow, ano talaga dyan, ang Cebu, napakaganda ng Cebu. Good evening po sa inyo.
Opo. Shoutout din po kay Lee Chowlan.
Okay.
Opo. Sila pa lang po, ma'am.
Okay, so good evening po. No? Okay, so tuloy po tayo ha. Good evening po sa lahat. No? Shout out. Okay, so pre-1984 or bago yung 1984 do, and the exist value charges charged by UPS sa mga kliyente niya or customers, no? So petitioner refers to its customers as shippers. No? So shippers, why? Kasi sila nag-ship ng goods no, na pinapadala kung kanino nila gusto ipadala. Petitioner charges its shippers a fee for the shipment of its package based on the weight of the package. No? So by weight. The distance that the package would travel and the value of the package and various accessorial services offered by petitioner. So, yun yung basis nila in charging the fee no, ng delivery. Petitioner's rates were governed by the tariffs, which it submitted to the ICC and the various states. The tariffs submitted to the ICC provided, among other things, for rates in cents per package and per pound as follows. Item 1,000, the rate for delivery of packages released to value not exceeding 100 per package shall be 116. No? So 100 per package shall be 116 cents per package plus the following rates per pound or fraction thereof. So ito yung rates nila. Zone 2, the rate is 8.9 cents. Zone 3, 11.8 cents. 4, Zone 4, 15.4 cents. Zone 5, 19.5 cents. Zone 6, 25.3 cents. Zone 7, 31.5 cents. Zone 8, 38.5 cents. No? So yun yung kanilang taripa o yung kanilang singil. No? Okay. The rates published in item 1,000 apply to all the packages shipped by petitioner. Okay. Petitioner provided its shippers with a rate card that enabled shippers to determine what petitioner would charge for a particular shipment. The distance of package was to travel determined the number of zones from the point of origin that the package would cross. So may basis sila on charging the delivery charges. No? A package shipped to Zone 2, for example, would travel approximately 150 miles. Layo nun, ha? A package shipped to Zone 3 would travel up to 300 miles. Zone 8 was the farthest zone and distance a package would travel within the United States. Zone 2 through 8 were represented as column headings at the top of the rate card. No? So, mahaba-haba yung travel ng Zone 8. No? Weight categories also determine how much petitioner charged shippers for transporting a particular package. Siyempre, mas malaki, mas mabigat, mas mahal. No? The rate card listed weights down the left side of the table in 1 pound increments from 1 pound to 50 pounds. By cross-referencing the zone and the weight, a shipper could determine the exact shipping charge for a particular package whose released value did not exceed $100. There was an additional charge under the tariff when a shipper declared the value of the package to be in excess of 100. So, syempre, pag excess 100, may additional na rin yun na charges. So, under the tariff, shippers could also elect to purchase accessorial services that had additional charges. So, may mga, kumbaga sa ano, may mga special services pa sila na ino-offer, no? Accessorial services included, among other things, collection on delivery, COD, and acknowledgement of delivery, no? So, pagka may ganyan, additional charges siya, no? So, with respect to damage and unclaimed property, the tariffs provided the following. Ito naman kung na-damage ang pinadala, no? So, damage and unclaimed property. Whenever property is damaged by the carrier in the course of transportation, the carrier will tender the damaged property to the shipper and offer to pay for the damage, not to exceed the actual or declared value of the property, whichever is the lower. So, yun ang patakaran nila, no? Whichever is lower on the declared value, doon liable yung shipper. If the shipper so elects, the carrier will pay the full actual or declared value of the property, whichever is lower. No, whichever is lower. Untitled of the property shall thereupon pass to the carrier. Kasi binayaran ng carrier, so sa kanya na yung property o yung parcels na pinadala. So the petitioner was obligated to shippers under the tariff to pay up to the actual or declared value for loss or damages caused by petitioner during the course of transporting the package. So, kung kasalanan ng shipper, then magbabayad siya for the loss or damages. No? Petitioner applied for and received from the ICC an order generally allowing petitioner and its shippers to agree in writing that petitioner's liability would be limited to a released value not exceeding 100 per package. No? So, yun yung agreement. With respect to the released rate and EBC, the tariff provided as follows. No? So, anong EBC? Excess value charges. No? So, yun ang EBC. Okay. Okay. So the tariff provided the following. No? Okay. So under the tariff, shippers could also elect to purchase accessorial services that had additional charges. No? So ang dami ng services na ino-offer. Pati itong accessorial services. Ano to? Collection on delivery and acknowledgement of delivery. No? So with respect to damages and unclaimed property, the tariffs provided the following. No? Whenever property is damaged by the carrier in the course of transportation, the carrier will tender the damaged property to the shipper and offer to pay for the damage not to exceed the actual or declared value of the property, whichever is the lower. If the shipper so elect, the carrier will pay the full actual and declared value of the property, whichever is lower. Untitled of the property shall thereupon pass to the carrier. So sa carrier na yung property. The petitioner was obligated to shippers under the tariff to pay up to the actual or declared value for loss or damages caused by petitioners during the course of transporting the package. Petitioner applied for and received from the ICC an order generally allowing petitioner and its shippers to agree in writing the petitioner's liability would be limited to a released value not exceeding 100 per package. No? So yun yung agreement sa ICC. ICC is the regulatory agency, no? So with respect to the release rate, an EVC, the tariff provided as follows, no? So yun naman ang tariff na provided. To determine rates in this tariff, refer to governing rate basis tariff to determine appropriate zone for use in determining the poundage rate. Refer to item 1000 or 1040 herein. So released value of shipment. The rates published in item 1000 or 1040 are applicable only when the value of the property declared in writing by the shipper or agreed upon in writing as the released value thereof is as follows. No? So yun yung value. Released to a value not exceeding 100 per package or article not included in a package, apply the rates as published in item 1000 or 1040. Released to a value exceeding $100 per package or article not included in a package, apply the rates as published in item 1000 or 1040 as base rates, plus a value charge of 25 cents for each 100 or fraction thereof of value in excess of the valuation in which the base rate applies. No? So, yan yung kanilang babayaran, no? In case na may loss or may damage na packages. So, under the provisions of the tariff, petitioner received from its shippers 25 cents for its additional 100 of declared value of a package shipped, and petitioner referred to the additional amount as an excess value charge or ABC. No? If a shipper paid the ABC of 25 cents per 100 of value, part or all of the declared value of the package would be paid to the shipper in the event that the package was damaged, no? Lost or destroyed. In the event that the shipper did not declare the value of the package to be in excess of $100, petitioner was liable to the shipper for the value of the package up to 100 lang. Kasi yun lang naman yung declared value niya eh. So up to 100 lang. In June 1983, petitioner filed supplements to its ICC tariff amending the provisions related to the method of determining rates for shippers under the original tariff. The supplements provided an additional clause with respect to the method of determining rates. Unless otherwise directed by the shipper, the carrier may remit excess valuation charges to the insurance company as a premium for excess valuation cargo. Insurance for the shipper's account and on its behalf. If the carrier does so, claims for loss of or damage to the shipper's property will be filed with and settled by the carrier on behalf of the insurance company. So may insurance na. Ito yung management of risk, yung insurance, no? So may insurance na sila. So in the event that the insurance company fails to pay any claim for loss of or damage to the shippers property under the loss of or damage to the shipper's property under the terms of its property, the carrier will remain liable for loss or damage within the limits declared and paid for. Kasi ang insurance naman, ano lang yan risk management lang yan. Pagka hindi nagbayad talaga, ang claim talaga sa loss sa may-ari, no? So yung insurance company, parang pinasa lang sa kanila yung liability, pero yung main talaga na liable is the carrier, no? So although the supplement were filed June 1983 and became effective July 1983, petitioner did not remit EVCs to an insurance company before 1984. So yung excess value, yung EVC natin, ito yung pinag-awayan dito yung excess value charges, no? Okay. In June 1983, petitioner filed supplements to its ICC tariff amending the provisions related to the method of determining rates for shipper under the original tariff. The supplement provided an additional clause with respect to the method of determining rates. No? So unless otherwise directed by the shipper, the carrier may remit excess valuation charges, EVC, no? to an insurance company as a premium for excess valuation cargo insurance for the shipper's account and on its behalf. If the carrier does so, claim for loss or damage to the shipper's property will be filed with and settled by the carrier on behalf of the insurance company. So nag-iba sila ng pamamaraan sa pagbayad ng damages. In the event that the insurance company fails to pay any claim for loss or damage to the shipper's property under the terms of its policy, the carrier will remain liable for loss or damage within the limits declared and paid for. No? So yung carrier pa rin ang liable pag ang insurance company hindi nagbayad. Although the supplements were filed June 1983 and became effective July 1983, petitioner did not remit EVC to an insurance company before 1984. So yun ang nangyari. Hindi niya ni-remit sa insurance company. So the declared value in excess of 100 is indicated on petitioner's package pick-up record. The package pick-up record was used to enter billing information into petitioner's billing system. Billing information for regular customers and shippers who ship parcels from petitioner's customer counters was entered into petitioner's computer system regularly by its district, and petitioner billed its regular customers weekly. The bills sent to petitioner's regular shippers reflected all amounts to be collected from those shippers. Included and itemized separately on those bills were the EVC and other miscellaneous charges. No? So all amounts collected from shippers by petitioner, including amounts for EVCs, were deposited into petitioner's bank accounts. No? Sino yung petitioner dito? Si UPS, no? Okay. Okay. So for the taxable year ended December 31, 1983, EVCs billed and or collected from shippers were included in petitioner's reported income for tax, financial accounting, ICC, State Regulatory and Securities and Exchange Commission, or the SEC reporting purposes. Claims. Shippers' claims were governed by the tariff submitted by petitioner to the ICC and the various states. Petitioner's tariff 201C, effective January 31, 1983, included provisions 510 relating to filing of claims, which provided All claims for loss or damage to property transported or accepted for transportation in interstate or interstate commerce must be in writing and must include reference to the pickup record number and date or copies of other documents sufficient to identify the shipment involved. Must assert liability of the carrier for alleged loss or damage, must make claim for payment of a specified or determinable amount of money, and must be accompanied with a copy of the original invoice, or if no invoice was issued, other proof, certified to in writing as to the value of the property or extent of the damage. So that's how they manage their liability, no, sa mga managed na mga loss na damage. So under Tariff Provision 510, a shipper was required to assert that petitioner was liable for the alleged loss or damages. Tariff 201C also contained provision 520 limiting the time for filing claims. So may limit din yung pagpa-file ng claims, no? Provision 520 provided, as a condition precedent to recovery, claims must be filed in writing with the carrier within 9 months after delivery of the property, or in case of failure to make delivery, then within 9 months after a reasonable time for delivery has elapsed, and suit shall be instituted against the carrier only within 2 years and 1 day from the day when notice in writing is given by the carrier to the claimant that the carrier has disallowed the claim or any part or parts thereof specified in the notice. Where claims are not filed or suits are not instituted thereon in accordance with the foregoing provisions, the carrier hereunder shall not be liable and such claims will not be paid. No? So under Provision 525, petitioner was required to promptly investigate its claim filed against petitioner. With respect to disposition of claims, Tariff 201C provides, carrier after receiving a written claim for loss or damage to property transported will pay, decline, or make a firm compromise settlement offer in writing to the claimant within 120 days after receipt of the claim by the carrier. So yan yung mga provisions kung mawala nung UPS, yung mga padala na parcels ng customer. UPS New York and UPS Ohio, through the respective district offices, processed all claims for loss or damages to parcels, including any excess value portion of a claim. When a shipper was in need of a verification of the status of a shipment, the shipper initiated an inquiry by either telephone or mail, which was referred to the Delivery Information Department of the district from which the shipment was made. Tracing requests were initiated as a result of a shipper's inquiries. So may tracing request, ito trace mo na saan na yung bagahe, no? So after the tracing request was completed, it was transmitted to the destination district via computer. If the record showed that the package was delivered and signed for, the clerk made a copy of the delivery record. If the tracing procedure was unsuccessful, petitioner assigned a loss damage investigation number to identify the shipper's claim. No? Bakit nawala? Petitioner remitted amounts for claims processed by the UPS New York and UPS Ohio from petitioner's central bank account. Generally, a single check was issued to a shipper if the shipper had declared excess value and a claim for loss or damage was paid. Before 1984, petitioner reported claims paid in excess of $100 as an expense for tax, financial accounting, ICC, state regulatory, and SEC reporting of purchases. So yun yung mga claims niya, no? Paid in excess of 100 daw, ini-expense niya for tax purposes. No? Okay. Petitioner made efforts to reduce claims, including excess value claims. Petitioner advised its drivers to pay extra attention to declared value packages. So very important yung declared value packages. Kasi yun ang magdedetermine ng kanilang yung liability in case na mawala ang parcels, no? Yung dineliver, yung pinapadala. Petitioners also incurred added handling costs in connection with excess value packages. In Metro New York, Long Island, New Jersey, and Metro Chicago, Petitioner took special precautions to avoid loss or damage to high-value packages. Siyempre, pag high-value packages, malaking babayaran pag nawala. For instance, in New York, with respect to jewelry and similar items, petitioner's driver would segregate them in his load, and upon arrival at petitioner's facility, a designated clerical person would meet the driver and take the packages containing the jewelry or other items. So, mga mahal, no? So, ano yan, takaw sa wala. Under certain circumstances, the packages would be specially bagged and tagged. No? Siyempre, mahal yun. Thereafter, the appropriate contact person at the next destination of the package would be informed of the position of the package on the trailer. When the trailer reaches its destination, a person would be present to retrieve the bag. No? So may mga ano talaga kasi importante, no? At saka mahal. Petitioner instituted and used special parcel handling procedures which involve segregating and protecting the high-value parcels, which is dapat lang, in other districts as well. Petitioner referred to the special handling procedure as controlled parcel handling. No? So, dapat lang kasi malaki yung liability nila pagka nawala. Petitioner maintained a loss prevention manual, no? Para maiwasan mawala yung mga packages that contained written standards and procedures on prevention of loss associated with the shipment of packages. Controlled parcel handling was addressed in a specific section of the Loss Prevention Manual. As part of the controlled handling procedures, petitioner performed audits in its hub. No? So may audit pa. Transportation and delivery operations to ensure security of high-value packages. Petitioner considered these procedures to be expensive and time-consuming. Siyempre, mas mahal. Negotiations to change petitioner's method of handling excess value charges. Ito yung ABC. Mr. Kenneth Johnson was the head of petitioner's insurance department. After various discussions with Mr. Walter Daniel Ski, petitioner's chief financial officer or CFO, regarding the manner in which petitioner collected AVCs, no, excess value charges, no. So Mr. Johnson contacted the brokerage firm of Frank B. Hall, no. So Hall was one of the largest insurance brokerage firms in the world. So ito na yung risk management, no, na pasa mo sa insurance yung risk. No? So Mr. Johnson had first worked with representatives at Hall in 1981. At the time, Mr. George Scord, an experienced vice president of Hall, worked with Mr. Johnson in connection with insurance for petitioners' aircraft and other matters. Mr. Thomas Garrity was a Hall vice president who worked for Mr. Cord. Okay. In 1982, Mr. Johnson met with representatives of Hall to discuss petitioners' EVCs, no, excess value charges. At their first meeting regarding petitioners' EVCs, Mr. Cord advised Mr. Johnson of potential alternatives that might be available to petitioner, including the possibility of petitioners forming its own insurance subsidiary. So yan ang recommendation na magpapagawa siya ng sarili niyang insurance subsidiary. Pero na tayong mga cases na nagpagawa ng insurance to handle its risk management, no? Pero since hindi nila na-handle na maayos yung kanilang insurance company, it was disallowed and it was taxed as an ordinary company and not as an insurance, no? So, kasi sa insurance marami ding requirements. Thereafter, Mr. Cord and Mr. Garrity attended meetings relating to the planning, structuring, and implementation of petitioner's subsidiary and petitioner's excess value activity. So, in September 1982, at the request of petitioner, Hall prepared a document titled United Parcel Service, a preliminary analysis of an insurance subsidiary. Meron na silang, kasi ano din yan yung risk management, no? preliminary analysis nila, gagawa sila ng insurance subsidiary, no, to handle their management, no, of risk pag nawala yung mga parcels nila, no. So instead na magbabayad sila sa mga insurance company, paggawa sila ng sariling insurance company. Okay. The preliminary analysis indicated that the whole understood that petitioner currently was liable to its shippers for the value of any parcels lost or damaged up to $100. The preliminary analysis indicated that the whole understood that the parcels with value in excess of 100 could be declared by the shipper, and the shipper could secure protection at a cost of 25 cents per 100 of value in excess of the first 100. So may insurance na, no? Hall further understood that while the protection provided by the AVC was not considered to be insurance, insurance could be provided by a UPS-owned insurance company. So the preliminary analysis then proceeded to make the following assumptions and conclusions. We have been advised that the revenues generated by this declared value of protection for the 1981 year approximated 67 million, and that the loss in excess of 100 per claim approximated 20 million. So 20 million yung claim. Magkano yung nila 67 million. 67 million yung nakolekta. 20 million yung claim. So magkano sobra? 47 million. So doon pa lang sa insurance. Ano na sila? Kumita na, no? So in exhibits 2-1A and 2-2A, we have attempted to set forth the implications of this coverage to petitioner on a net after-tax basis, no? Siyempre, ano naman yung tax, no? Yung tax authority, the IRS. Ano sila doon sa income? Pagka kumita ka ng income, lahat yan taxable unless there is really a provision to exempt that income. Pero pag wala, taxable talaga lahat ng income, no? So in this case, this is a taxable income. So in this exhibit, we have made the following assumptions. Number one, revenues are in equal amounts payable at midpoints of quarters. Number two, expenses are as percent of gross premium, no, 0%. Number three, loss ratio equals 0.299, no? So yun yung loss ratio. So nangungulekta sila ng insurance, yung ng 100%, yung loss ratio is 0.299. So magkano ang tubo nila, no? So 0.701, no? Duration in years to ultimate value of losses, 2. Annual payout pattern, 70%, 30%. Number 6, plan reimburses gross paid losses for each month at the end of the following month. No? So yun yung paid losses nila. Applicable federal income tax rate as percentage, no, 46%. And effective rate of interest per annum as percent, 12%. So based upon these assumptions, review of exhibits 2 and 1A and 2-2A disclose that the contribution of this program to petitioners after tax earnings is 31,1,618 at the end of the second subsequent year when all losses are closed, no? So pa na sa insurance, makikita na sila aside from the service charges, no? So on February 24, 1983, a meeting was held at Hall's offices in Briarcliff Manor, New York, to discuss petitioners' exist value activity. In attendance at this meeting were Mr. Daniel Ski Johnson, Pat Edmonds, Jerry Stein, and Jack McGuinness representing petitioner. Mr. Allen Doherty as petitioner's attorney, and Mr. Scord Garrity and Roger Wade representing Hall. Mr. Cord prepared a memorandum dated March 1, 1983 that summarized the purpose and content of the February 24 meeting at Briarcliff Manor. The memorandum states, the purpose of this meeting was to consider Frank B. Hall's proposal presented to petitioner last September 1982, which dealt with the feasibility of creating a subsidiary insurance company, no? The subject reviewed in the report dealt with declared value insurance and the utilization of an insurance subsidiary to handle customer risk of loss on property in transit. So instead na kukuha sila, mag-outsource sila, kukuha sila ng insurance company, magbabayad sila doon, sila na mismo ang mag-handle o mag-manage ng sarili nilang insurance company. No? The topics discussed in our Thursday meeting focused strictly on the declared value program and the viability of converting this into an insured plan that would produce in the final analysis an improved economic result for petitioner. The report submitted by Hall dealt with the organization of a United Parcel Insurance Subsidiary Company. So gagawa na sila ng insurance subsidiary. This new insurance entity would assume reinsurance from a licensed admitted U.S. carrier who would underwrite the declared value program. During the February 24 meeting, Petitioner's Tax Counsel, Mr. Doherty, expressed concern with the specifics of the whole proposal. So meron din silang tax counsel, no? And he believed that the proposal would not be viewed favorably by the Internal Revenue Service. No? Yun ang sabi ni Mr. Doherty. Mr. Doherty suggested an alternative whereby petitioner would form an insurance company in Bermuda. O, yan na. Kasi maraming nag-iisip, so maraming suggestions. So, saan gagawin yung insurance company in Bermuda? To be owned by petitioner's employees. So, ipapangalan sa employees. And in this manner, such a company would be classified as a non-controlled foreign corporation. No? So Mr. Doherty believed that the Bermuda Insurance Company would accept reinsurance of a licensed U.S. underwriter directly and not have U.S. tax obligations on profits until risk funds were repatriated. No? So yun, mas maraming nag-iisip, no? Mas maraming tax-saving devices. After all the alternatives were discussed, it was agreed that petitioner would pursue the alternative to create an insurance subsidiary to act as a reinsurer. So, they agreed na talagang gagawa sila ng sarili nilang insurance company, no? Itong UPS. Further, the insurance subsidiary would be owned by petitioner and ultimately petitioner might adopt a long-range strategy of transferring ownership in such a company to petitioner's shareholders. Finally, it was agreed that Mr. Danielski and other members of the UPS team would submit a proposal to senior management based on the following financial projections as stated in Mr. Cord's March 1, 1983 memorandum. So ito na yung result, no? Brainstorming, no? So maraming nag-iisip. Okay. UPS correct position. Projected 1983 declared value revenue, 69,900,000. Estimated 1983 losses, 21 million. Ito based sa actual nila, ha. So pre-tax profit nila is 48 million. 0.5. Net after-tax profit is 26,190 kasi sa 48 million magbabayad ka pa ng tax dyan. Alternative program. Insured declared value program, US front, no? Estimated annual premium, 69. Estimated expenses, 4 million. Net underwriting income, 65, no? Okay. Yun yung number 1, na? Kasi ang hinahanap mo dito, yung pinakamalaki yung kikitain. Number 2, UPS Insurance Subsidiary, no? Magkikreate na sila ng subsidiary insurance company, no? Foreign reinsurance premium income, 65 million. Ceding commission, kasi magbibigay na ng commission, 1.7 million. Net premium income, 63 million. Expected losses, 21.4 million. Underwriting profit, 42 million. Projected benefit, no? 16,077,500. Yun yung alternative nila, number 2. So, front fee, 2. Premium tax, 3.5%. Federal excise tax, 1%. No? Total, 6.5%. The 16 million projected benefit to petitioner is the amount of federal income tax petitioner would have otherwise paid and is based on the assumption that the underwriting profit, which was referred to as the UPS Insurance Subsidiary in Bermuda, would not be subject to federal income tax, no? Ibig sabihin, yung subsidiary nila, lalagay nila sa Bermuda, walang income tax, no? EIG or American Insurance Group in UF, no? Ito yung mga companies. American International Group Inc., AIG, was a holding company and the parent of over 500 subsidiary operating insurance and subsidiary companies. So, ang dami niyang subsidiary companies na may insurance, no? AIG Risk Management Inc. was a subsidiary of AIG. Mr. Joseph Smetana served as President and CEO of AIG-RM and Senior Vice President of INUF. INUF was a wholly owned subsidiary of AIG and operated as a domestic insurance company. So, dumami na yung mga companies involved, no? So, on behalf of all, through a letter dated April 27, 1983, Mr. Cord contacted Mr. Smetana. In the letter, Mr. Cord apprised Mr. Smetana of petitioner's plan regarding the EVCs. Mr. Cord indicated in the letter that the petitioner's plan contemplated that the shipper's property handled by petitioner would be insured under a master shipper's interest policy. So, yun na yung mga napag-usapan, no? Further, the letter indicated that the contract of insurance would be issued to petitioner and would cover the property of the owners, shippers, consignees, or other interested parties. With respect to the anticipated risk on exposure to AIG, the letter stated, the shippers' interest programs is to be 100% reinsured to Union International Hamilton, Bermuda. No? Union will then retrocede this risk to other insurers. This, therefore, would leave the shipper interest issuing carrier in a fronting capacity with essentially no risk or exposure to loss under the program. So magaling talaga sila mag-isip, malalim. Finally, the letter requested that AIG submit a proposal on petitioner shippers interest program setting forth the fronting administration fee it would require as the issuing carrier. Estimated premium taxes applicable under this program. Its acceptance of Union International as the program reinsurer. Acceptance and confirmation of petitioner as the authorized program administrator with total claims settlement authority. Letter E, the specific documentation required to be given to shippers electing coverage under this program. So on April 27, 1983, Mr. Cord sent a letter to Mr. Robert Sargent of Travelers Insurance Co. discussing petitioner's exist value program and requested that travelers submit a proposal for the exist value program. On May 20, 1983, Mr. Sargent sent a letter to Mr. Cord outlining an alternative for petitioner. In the letter dated May 7, 1983 to Mr. Cord, Mr. Smetana presented AIGRM's proposal for an exist value programs. So in the letter, AIGRM proposed that it would issue a single master insurance contract that would cover the interest of petitioners' shippers. The proposal indicated that the documentation of coverage under such a contract would be identified through a service instruction agreement and the declared value entry on the bill of lading. AIGRM's proposal was based upon insurance coverage for values in excess of 100 at a premium charge of 25 cents per 100 of insured value in excess of 100. So dito sa insurance issue pa lang sila nag-iisip, no? So among other things, AIGRM proposed that A, premiums be remitted by petitioner to INUF on a monthly basis, less any losses paid and loss expense incurred. B, petitioner administer all claims under the policy on behalf of INUF. And C, petitioner be responsible for bad debts of uncollectible items since INUF had no control over the payment of premium by shippers. Hall found the AIG RM proposal to be more reflective of petitioner's requirements than the traveler's proposal and submitting the AIGRM proposal as its recommendation for review by petitioner's management. No? So ito yung napagkasunduan nila. INUF prepared a binder of insurance under which it subscribed the insured as United Parcel Service of America. So UPS pa rin siya, no? United Parcel Service of America, Inc., on behalf of its customers, shippers, consignees, or other interested parties as their interest may appear. The binder described the insurance as shipper's interest, no? The rate of premium under the binder was set at 25 cents per 100 of declared value, and the insurance would become effective as of August 8, 1983. No? So may kasama na silang insurance. However, on August 8, 1983, Mr. Cord sent a telex to Mr. Smetana which stated, Petitioner has postponed finalization of shippers' interest program pending the review and evaluation of new tax legislation currently on the floor of the House of Representatives. No? So, may network talaga din sila sa Congress, no? Which we understand came of committee end of last week. Will keep you completely apprised of the development as they occur. No? So, may parang held in abeyance because of the finalization ng tax legislation. No? Petitioner and AIG continued to work together in planning customer shippers interest program. On October 25, 1983, Mr. Cord of Hall sent Mr. Smetana of AIG a letter which, among other things, proposed that changes be made to the wording of petitioner's service explanation. Petitioner's service explanation is a document, no? Document siya, regularly provided by petitioner to its customers as part of a kit containing other documents upon commencement of the relationship, upon request by customers, and upon other occasions. Service explanation were generally available to petitioners walk-up customers upon request. As of November 1983, petitioner's service explanation stated, no, unless a greater value is declared in writing on the pick-up record, the shipper declares the released value of its package or article not included in a package to be 100. So for each 100 or fraction thereof, ito na yung agreement nila doon sa coverage ng insurance. For each 100 or fraction thereof of value per package or article not included in a package in excess of $100, an additional charge as stated on the current rate start applies, except if otherwise directed by the shipper. The carrier will remit excess valuation charges to National Union Fire Insurance Company of Pittsburgh, PA, as a premium for excess valuation cargo insurance for the shipper's account and on its behalf. No? When the carrier does so, claims for loss of or damage to the shipper's property will be filed with and settled by the carrier on behalf of the insurance company. So in the event that the insurance company fails to pay any claim for loss of or damage to the shipper's property under the terms of its policy, the carrier will remain liable for loss or damage within the limits declared and paid for. Shipper's interest policy, IMB 9310977, is available for inspection at the office of the carrier. Claims not made within 9 months after receipt by the carrier of the merchandise shall be deemed waived. So in December 1983, petitioner circulated to its shippers an edition of its quarterly newsletter entitled Roundups. Within the December Roundups, petitioner informed its shippers that petitioner intended to make permanent the practice of allowing its drivers to leave packages at certain specified location without a signature. No? So with respect to the delivery of packages without the normal signature, petitioner started the following in its newsletter. Petitioner also will continue to assume liability for lost and damaged packages up to 100 or the declared value. It might seem that leaving packages even in safe places risk theft, whether damage, denial of delivery, or other types of losses. Actually, claims for lost and damaged packages declined in Indians and Iowa, where we've had the most experience with the program. On December 28, 1983, representatives of AIG and INUF signed an insurance policy entitled Shippers Insurance and numbered IMB 9310977 on behalf of INUF, which listed the name and address of the insured as follows. Name and address of insured, shippers, consignee, customers, or other interested parties, as their interest may appear with regard to parcels shipped via United Parcel Service of America, Inc., UPS, no? And or its subsidiaries as now or hereafter constituted herein after referred to as UPS. No? 643 West 43rd Street, New York, New York. The address listed under the name and address of the insured served as petitioner's world headquarters, no, sa New York. The contract was for a term from January 1, 1984 until canceled. INUF issued the contract in the state of New York with the understanding that it was pursuant to the Free Trade Zone legislation, Article 63 of the New York Insurance Law. Clause 2 of the shipper's interest contract states, petitioner will provide space on its pick-up record, which will be labeled declared value if in excess of $100. A declared value is indicated by the name insured in the space provided shall evidence the existence and the amount of this insurance subject to limits of liabilities provided herein. This insurance shall not apply unless a declared value is indicated by petitioner's pick-up record. Clause 6 of the shipper's interest contract generally provided that INUF was not liable for the first 100 of the value of the property, and in no event did INUF's liability exceed the declared value for surface shipment and a maximum of $25,000 per package for air shipment. The cancellation provision of the contract stated. So, ganun na yung kanilang agreement, no? Or yung kanilang setup. This policy may be canceled by the named insured or petitioner on behalf of the named insured by mailing to the company written notice stating when thereafter such cancellation shall be effective. This policy may be canceled by the company by mailing to the named insured or petitioner at the address shown in this policy or last known address notice stating when not less than 30 days thereafter such cancellation shall be effective. So under this provision, petitioner had the power to cancel the shipper's interest contract. Okay. Clause 20 of the shipper's interest contract addressed other insurance and stated, if there is any other insurance covering the property insured hereunder or petitioner's liability if any, whether prior or subsequent to or simultaneous with this policy, which in the absence of the insurance would cover the loss, damage, or liability hereby covered, then this company shall not be liable hereunder for more than the excess over and above such other insurance. This clause, however, shall not apply to insurance effected by a named insured, and the existence of such insurance or payment of a loss thereunder shall not constitute a defense of any claim otherwise payable under this policy. Nor shall such insurance be called on to contribute to any loss payable hereunder. So under Clause 20, INUF is not liable in the event that petitioner's liability for loss or damage to a shipper's package was covered by another insurance policy unless the other policy was effected by a shipper. No? Okay. Affiliated FM insurance policy. Petitioner maintained an insurance policy with affiliated FM insurance company, AFM policy. The AFM policy was issued on December 27, 1982 and provided coverage from October 1, 1982 to 1985. So kumuha siya ng insurance company, no? The AFM policy is insured petitioner's property and liability for Among other things, petitioners' interest in the real and personal property of others, including parcels held for delivery and in transit, for which petitioner may be liable or for which the petitioner may assume liability or agree to insure prior to loss affected thereby. So the AFM policy contained a 100 million liability limitation with sub-limits. The AFM policy had a 10 million limit on personal property, while in the course of transportation as respects loss or damage arising out of any one occurrence and a deductible clause that excluded the first 25,000 of claims arising out of any one occurrence from coverage. On December 28, 1983, an endorsement was added to the AFM policy, which became effective January 1, 1984. The endorsement stated, permission is hereby granted to insure the deductible amount 25,000 applicable to coverage 1B. Personal property while in the course of transportation, if such property is also insured under policy IMB 9310977, issued by the National Union Fire Insurance Company of Pittsburgh, PA, and any renewals or rewrites thereof, it is agreed that any such insurance shall be ignored in determining the amount of loss to which such deductible amount applies. If it is also agreed that 30 days advance notice of cancellation shall be given to National Union Fire Insurance Company of Pittsburgh, PA. Any claims presented that exceed 25,000, National Union agreed to abide with one settlement of such claims. Okay. Petitioner paid annual installment premiums of $356,945 for coverage of all petitioners' real and personal property, including parcels held for delivery and in transit. The annual premium was based on property values and stated rates. The AFM policy provides a calculation for the annual premium, which operated to apportion 86,820 of the total annual installment premium to property value related to parcels in transit. May shoutout pa, Hari? Oh, sige, shoutout muna. Kasi nasa operation pa lang tayo, ha? Nasa kung ano pa nangyari or background of the case. Doon pa tayo sa second, kasi dalawang ano po ito. Yung second natin na discussions dito about this case, doon natin pag-aralan yung decision ng court. Pero right now, ano munang mangyari? Kasi para sa akin, napaka-importante on what transpired or what are the activities or what have been done during the operation, no? Na ito na yung naging resulta. Sige, shout out muna.
In shoutout, ma'am, si Lilian Yao. Ma'am Lilian Yao, good evening.
Ma'am Lilian, good evening po.
Apo, siya pa lang, ma'am.
Okay. So, ilan na yung viewers natin?
7 po.
Okay, so, good evening po ulit sa ating 7 viewers, no? Thank you for watching and tuloy lang po tayo because we are setting up the background on this case, no? Kasi ito yung UPS. This is a very popular case. Why? Kasi kilalang natin yung UPS, di ba? No? So, this is what happened in this case. So, Opsinco Limited or OPL, on June 9, 1983, pursuant to petitioner's plan, hauled through Parkers and Company, Interocean Limited, Parkers and Company, prepared a summary of a proposal to organize an insurance subsidiary domiciled in Bermuda under the name Opsinco Limited or Opsinco. By a memorandum dated June 13, 1983, Mr. Cord provided to Mr. Johnson copies of the form filed with the Registrar of Companies in Bermuda related to the incorporation of Opsinco. So ito na. On June 23, 1983, a meeting was held with the following persons attended. No? Mr. Daniel Ski, Johnson, and Jerome Stein, representing petitioners. Mr. Garrity, Cord, and John Lacono, representing Hall. Mr. Reuben Spencer Arscott and Geoffrey Hunt of Hall, Bermuda, and Mr. Chet Butterfield and John Ellison of the Bermuda law firm of Conyers, Deal, and Pierman. Among other things, the purpose of the meeting was to discuss various aspects of the shippers' interest program, including the contract form, documentation, certification, service instruction, agreement, monthly, borders, and premium loss reports. So, ito na yung kanilang insurance na gagawin sa Bermuda. Obsinco was incorporated in Bermuda as a wholly owned subsidiary of Petitioner. On June 28, 1983, wholly owned subsidiary siya ni UPS. Okay. Obsinco was registered as an exempted company pursuant to the provisions of Section 13 of the Companies Act of 1970 under the laws of Bermuda. On June 28, 1983, the first meeting of the Provisional Board of Directors of Obsinco was held. The Provisional Directors of Obsinco were listed as Mr. John E. Ellison, Director, CFA, Cooper and Inbidel Jr. Obsinco was incorporated with initial capital of 1.2 million and had 12 million shares of capital stock. Initial ownership of the stock of Obsinco was as follows, name, number of shares. United Parcel Service of America, Inc., 1,199,994. Okay. So kay UPS owned talaga siya. Walter A. Danielski, 1 share. Kenneth Johnson, Jerome Stein, John Ellison, Ed.C. Butterfield, R.S.L. Pearman, tigwa 1 share po sila. No? So on July 14, 1983, the shareholders of Obsinco held their first general meeting in which they elected a board of directors. The elected board of directors consisted of 5 people. 3 of the 5 directors elected, Mr. Danielski, Johnson, and Stein, were also employees of Petitioner. So sila din yung board of directors, at the same time sila din yung elected na, sila yung employees at the same time elected na board of directors. The remaining 2 elected directors, Mr. Ellison and Butterfield, were representatives of the Bermuda law firm of conveyors, Deal and Pierman. O biro mo yan, pati yung mga taga-Bermuda elected na also as directors. The minutes of the first meeting indicate that Mr. Danielski and Johnsons were respectively elected to the position of President and Vice President of Obsinco. The minutes further indicate that Mr. Stein was appointed as Secretary and Treasurer, and that Mr. Danielski was appointed as Assistant Treasurer. Thus, the majority of Obsinco's board of directors and officers were all employees of Petitioner. So during the July 14, 1983 meeting, the board of directors of Obsinco appointed Parker and Company as manager of the company and passed bylaws which it then submitted to the shareholders for confirmation. Also on July 14, 1983, then the shareholders of Obsinco confirmed and adopted the bylaws and approved all actions taken by Obsinco provisional directors on June 28, 1983, and its directors on July 14, 1983. On August 1, 1983, Obsinco was certified as an insurer in Bermuda by the Minister of Finance. By resolution dated October 31, 1983, the Executive Committee of the Board of Directors of Petitioners authorized a capital contribution in the amount of 41,017,575 in cash to Obsinco. In addition, the Executive Committee of the Board of Directors of Petitioners resolved to take all actions necessary to effect a change of the name of Obsinco to Overseas Partners Limited or OPL. So binago na nila yung pangalan. By resolution on November 3, 1983, the board members of Obsinco increased the authorized share capital of the company by 15,687,030 from 1.2 million to 16,887,030 through the creation of an additional 156,870,300 shares of capital stock at 10 cents per value. No? So the members of Obsinco further resolved that the sum of 25 1,330,545 be accepted as contributed surplus, resulting in an increase of 41,017,575 in Obsinco's capital to 42,217,575. Okay, ito nag-increase capital, yung insurance. On November 14, 1983, petitioner made a capital contribution of cash in the amount of 41,017,575 to Obsinco. On November 17 and 18, 1983, petitioner's board of directors declared a dividend of 1 share of OPL, then known as Obsinco capital stock, on its outstanding share of petitioner's stock, excluding petitioner's shares held in treasury, payable on December 31, 1983 to shareholders of record on November 18, 1983. So on November 23, 1983, the board members of Obsinco resolved that the name of the company be changed to OPL. By resolution dated November 25, 1983, petitioner's board of directors changed the name of Obsinco to OPL. On December 28, 1983, NUF and OPL entered into a facultative reinsurance agreement under which NUF agreed to cede its liability under the shipper's interest contract to OPL as reinsurer. So ito na yung ginawa nila. Under the terms of the agreement, NUF was required to remit the OPL 100% of the gross amounts received from petitioner under the shipper's interest contract, less a commission to NUF of 1.18% of the gross premium not to exceed 1 million. An allowance of 3.1% of the gross premium written to cover NUF's premium tax and board and bureau charges, and C, 1% of the gross premiums for the purpose of paying federal excise taxes. In addition, under Article 9 of the agreement, NUF held as security an amount equal to the first 2 months of gross premiums written less commission, taxes, board, and bureau charges, losses paid, loss expenses paid, and federal excise taxes, if any. So the agreement became effective on January 1, 1984, and remained in effect until canceled or terminated. The termination provision of the agreement stated, neither the company nor reinsurer may terminate this agreement while the policy listed in Article 1, Item B is in force. So, however, if the policy listed in Article 1, Item B is in fact terminated, then in that event and that event only, this agreement shall be terminated simultaneously therewith. So, yan yung provisions nila. Under this provision, neither NUF nor OPL could cancel the agreement while the shipper's interest contract remaining in force. Okay. May ano pa tayo?
Wala na pong shoutout.
May viewers pa?
Meron pa. 5 viewers.
Okay, sige, tuloy natin na kasi sa next natin is ano na, next week, no? Tuesday. Kasi wala na tayong transfer pricing na live, no? Live streaming sa this week. Kasi Miyerkules na. Kasi hindi tayo nakapag-live streaming nung Monday. No? So, yung next natin sa Monday na. No? So, on December 31, 1983, petitioner made a distribution which it treated as a taxable dividend to its shareholders. No? So, may ano na sila, taxable dividend, kumita of 1 share of OPL stock for its share of petitioner's stock then outstanding. Petitioner distributed 164,477,491 shares of OPL stock with a net asset value of 25 cents per share. The total dividend was 41,119,372.75. The fair market value of the OPL capital stock received by its petitioner shareholders was considered by petitioners to be ordinary income to its petitioner's shareholder. In 1983, petitioner was owned by its active employees and former employees, as well as the families, estates, and trust of former employees. In 1983, there were approximately 14,000 shareholders. On December 31, 1983, as of the moment of distribution of the OPL stock, the shareholders of OPL were essentially the same as petitioner shareholders. No? The only difference between the shareholders of OPL and petitioner shareholders was that petitioner shareholders did not receive the same proportionate interest in OPL that they owned in petitioners because petitioner itself was a shareholder of OPL. No? So December 31, 1984, there were 14,811 shareholders in OPL holding an aggregate of 164,358,562 shares of common stock, not including the 4,511,738 treasury shares of OPL owned by petitioner. The total shares in OPL equaled 168,870,300. On December 31, 1984, there were 16,297 shareholders in petitioner holding an aggregate of 163,182,028 shares of common stock. The 4,511,738 shares of OPL owned by petitioners represented 2.67% of the 168,870,300 shares in OPL on December 31, 1984. So during the years in issue, restrictions applied in the event of OPL shareholders wanted to sell shares of OPL. No outstanding shares of OPL capital stock were transferable except by gift or inheritance unless the shares were first offered for sale to petitioner at the lower of the net book value of the OPL stock or at the price and terms at which the OPL stock was offered to the proposed transferee. OPL shareholders were required to notify petitioner's treasurer of the number of shares proposed to be sold, the proposed price per share, the name and address of the proposed transferee, and the terms of the proposed sale, and provide a statement of the proposed transferee that the information contained in the notice was true and correct. OPL shareholders had the right to pledge OPL stock, but were not allowed to transfer the stock upon foreclosure without petitioners having first been offered the option to purchase the stock. No? So, yun na po yung kanilang agreement. So, 1984 and years following general. For the taxable year ending December 31, 1984, excess value amounts billed to regular shippers and collected from other shippers were not included in petitioners' reported taxable income. Petitioner did not include excess value amounts billed to regular shippers in the filing with the SEC and the ICC for the year ended December 31, 1984. Otherwise, petitioner's activities with respect to the excess value activity basically remained the same as in prior years. Petitioner continued to bill customers for shipping charges on the basis of information recorded by shippers on the package pick-up records. So, same pa rin yung billing nila, no? The bills reflected all amounts to be collected from shippers, including EVCs. All amounts collected, including EVCs from the shippers, were deposited in petitioner's bank accounts. Petitioner continued to process all claims for loss or damage to parcels, including any excess value portions of the claim. If a claim for loss or damage was paid, petitioner continued to remit the amount for the claim by check to the shipper. Petitioner did not apply for and did not hold an insurance license of any type. Yun ang ano nila, siguro yung na-mislook nila, no? During 1984, petitioner's employee who processed shipper's claim were not licensed as claim adjusters in the states in which they processed claim. Ayun yung kakaligtaan nila. INUF did not participate in the resolution of specific claim in 1984, challenge the amounts of specific loss claim paid by petitioner, or challenge the amount of loss and damage claims that petitioner subtracted from the amounts that it remitted to NUF during 1984 in connection with NUF contracts, no? IMB 93 10977. So, accounting. For the taxable year ended December 31, 1983 and 1984, ito yung year under dispute, no? Ito yung may kaso. UPS New York and UPS Ohio were required to file annual reports with the ICC and were required to follow the rules of accounting and use the accounts established by the ICC in connection with ICC accounting and reporting requirements. Petitioner was also required to follow generally accepted accounting principles for financial accounting and managerial reporting purposes. Petitioner used a system of accounts that was generally the same as the ICC. No? ICC system of account numbers. However, petitioner's expense accounts are much more detailed than ICC expense accounts used for ICC accounting purposes. With respect to a shipment made by a regular customer, there was no change in the method in which journal entries were made in 1983 and 1984. Ito yung year under dispute natin, 1983 and 1984. Petitioner generally debited accounts receivable and credited an intercompany account. When petitioner received the AVC amounts from its shippers, the amounts were deposited in petitioner's bank accounts. So petitioner paid shippers' claim out of corporate bank accounts. Petitioner did not make changes to its internal accounting worksheets at its district level in 1984. The worksheets detailed the AVCs differently in 1984 than in 1983. However, petitioner's accounting journal entries were the same in 1984 as they were in 1983 at the district level. Okay. Transactions between petitioner and NUF. Beginning in January 1984, petitioner transferred excess value amounts billed to its regular shippers and collected from other shippers, net of claim paid in excess of 100 to NUF on a monthly basis. So ito na yung mga transactions. Petitioner did not receive reimbursement of compensation from NUF for generating, billing, and collecting AVCs or for processing the excess value claim. In 1984, petitioner began preparing a bordereau statement which summarizes by state the units of excess value purchased by shippers and the claims in excess of 100 paid to petitioner shippers. The bordereau statement reflects total amounts transferred by petitioner to NUF during 1984 as follows. No? So ito yung month, ito yung gross premium, claims paid, and then the net premium. No? Okay. So, total, 99,794,000, yun yung gross premium. The claim paid is 22 million, so the net premium is 77. So, the category net premium represent AVCs billed to petitioners, regular customers, and collected from other shippers from each of the states and the District of Columbia. Less claims over $100 remitted to petitioner shippers during the month. Generally, around the middle of the month following billing to regular shippers or collection from walk-in shippers, the net amount were remitted by wire transfers from petitioner's account to an NUF account. No? So, laki ng tubo nila sa insurance kasi laki ng nakolekta nila pero maliit lang yung bayad nila sa premium. Kaya laki ng tubo. No? No interest on excess value amounts that had been collected before the excess value amounts were transferred to NUF was paid to NUF. During 1984, if a shipper did not pay a bill that included declared excess value amounts, petitioner did not reduce the amount transferred to NUF. If collection activities occurred, petitioner attempted to collect the entire amount due from its shipper, including any AVCs included in the bill. Petitioner did not reduce the amount transferred to NUF by any amount uncollected or any cost it incurred in collecting delinquent AVCs. No? So transactions between NUF and OPL. Beginning in January 1984, after receiving the amounts remitted to INUF by petitioner, INUF prepared a bordereau and remitted the net amounts shown in INUF's bordereau to OPL by wire transfer. The following table summarizes the amounts and dates on transfers made by INUF to OPL relating to excess value amounts during 1984. Oh, so yun yung month. Net premiums, underwriting expenses, taxes, boards, bureau, funds withheld, interest on funds withheld, net payment to OPL, no? So magkano? The total is 77 million. Yung net payment niya to OPL is 59 million, no? So magkano lang yung expenses niya? Okay. FFIC PIP. Fireman's Fund Insurance Company, through a policy sold by Parcel Insurance Plan, Inc., since 1966 offered excess value protection for shipments sent via Petitioner, the U.S. Postal Service, and other carriers. No? So most of FFIC PIP's business came from petitioner shippers. PIP tried to solicit business from petitioner shippers who spent at least 1,000 annually for EVCs. No? So generally, PIP charged 50% of the rate charged for the excess value coverage offered by petitioner to its shippers. This amounted to a price of 0.125 per 100 of coverage. No? PIP declined to provide coverage to certain high-risk shippers and also declined to provide coverage on certain types of packages. However, PIP's marketing materials indicate that shippers in industries with serious theft problem could still participate, but they were charged more than 0.125 per 100 of coverage. If such a shipper were accepted by PIP, PIP would charge between 0.15 and 0.175 per 100 of coverage. Okay. So yun ang offer, no? FFIC was responsible for payment of losses and reimbursed PIP weekly for loss claims paid. For the years 1983 and 1984, PIP's profit margins equaled 36% and 34%, respectively. PIP paid approximately 64% and 66% for 1983 and 1984, respectively, of the amounts collected to FFIC for the parcel protections. For 1983, FFIC's gross profit margins equaled 27% of the premium written. Ito na yung mga insurance companies, no? Okay. Liberty Mutual Insurance Policy. Insurance policy between petitioner and Liberty Mutual. No? Liberty Mutual is a group of mutual insurance companies. Liberty Mutual are multi-line property and casualty insurers based in Boston, Massachusetts, which operate in all 50 states and the District of Columbia, Canada, and the U.S. Virgin Islands. Liberty Mutual Fire Insurance Company, or Liberty Mutual Fire, is a member of Liberty Mutual. Liberty Mutual wrote workers' compensation insurance in all states except those that were monopolistic. In the 8 monopolistic states, only one state-affiliated company was permitted to write workers' compensation policies. In 1984, workers' compensation policies accounted for 39.3% of Liberty Mutual Fire's net premium. In 1984, Liberty Mutual Fire wrote workers' compensation policies in California. California law prohibited insurance policies for California workers' compensation risk from also insuring workers' compensation risk for other states. Thus, a California workers' compensation policy was always a standalone policy. So the initial premium for a workers' compensation policy in California was determined by a statutory formula which took account of the estimated peril for each job classification. However, an employer's loss experience could also affect the premium if the employer received an experience modification from the state of California. Generally, California law permits the payment of dividends by a mutual insurance company, but prohibits any individual or insurance company from promising the future payment of dividends under an unexpired workers' compensation policy or misrepresenting the conditions for dividend payment. No? See California Code registration. No? Then, from 1979 through 1983, petitioner self-insured its workers' compensation risk in California. RL Coach, a company unrelated to petitioner or Liberty Mutual, administered this program. Liberty Mutual wrote the workers' compensation insurance for petitioner in all other states that were not monopolistic during this period. Any employer in California seeking to be self-insured for workers' compensation must submit an application to the state and obtain state approval. Any employer seeking to change from a self-insured to an insured program for workers' compensation must also submit an application to California and obtain state's approval. No? So on October 3, 1983, Mr. Eugene Sinleber of Petitioner's Insurance Department requested that Mr. Al Sharlon submit a proposal for taking over the administration of Petitioner's California Workers' Compensation Program from RL Codes. Mr. Sharlon worked in Liberty Mutual National Sales Department, which handles large national accounts. Subsequently, Petitioner and Liberty Mutual agreed that Liberty Mutual would write an insurance policy for Petitioner's 1984 California Workers' Compensation liability. December 15, 1983, the state of California sent a letter to Petitioner reflecting its understanding that it was the intention of Petitioner to withdraw from workers' compensation self-insurance status in California. So on December 28, 1983, Petitioner sent letter to the state of California confirming that Liberty Mutual Fire was taking over the management of all open and closed self-insurance claim from 1979 through 1983. No? So nag-iba sila ng insurance company. Okay. Just na, no? Okay. So, ano tong insurance premium, no? This was the insurance premium na binayad ng UPS, no? Sa insurance company, no? Nila. That was also under dispute, no? May parang somewhat na overpayment, no? Okay. So we will end our discussion here, pero tuloy natin sa next sa Monday, no? Kasi may part 2 pa tong ating discussion dahil mahaba po tong ating discussion on UPS of America versus the Commissioner of Internal Revenue at ano po yung ating discussions dito on tax-motivated transactions and also the Sham or fraudulent transactions, no? So doon tayo sa kung ano pa muna yung ginawa ng UPS of America in order to save their payment of taxes, no? So sa next week, yung Monday natin, discuss naman natin, continuation ating discussions, ano nangyari sa anong mga ginawa nila on the issues that we have discussed kanina, no? Ano yung mga issues na na-discuss na natin kanina. Ito yung findings ng yung mga deficiencies na ng court, no? Yung whether the amount collected by petitioner as excess value charges or the EVCs from its customers must be included in gross income kasi hindi nila yung mga collections nila na excess value charges hindi nila sinasama sa gross income, no? And then whether petitioner is entitled to deductions under section 162, no? Doon sa kanyang insurance union fire insurance. Whether respondent properly disallowed petitioner deduction paid to Liberty Mutual Insurance Group, no, sa California para sa workers' compensation premium. Yun yung discussion natin, hanggang doon lang tayo. Whether petitioner liable for an addition to tax for negligence or intentional disregard or rules of regulations for year 1984. No? So, yung discussions natin ngayon hanggang doon lang sa number 4, no? Kung liable ba siya sa tax to for negligence or intentional disregard of rules of regulation for tax year 1984. So, next meeting natin sa discussion natin will be on Monday. Continue po natin yung ating deductions on the mga insurance, no? Kasi insurance claim pa lang to, no? Kasi ito yung K na source ng income din ng UPS aside from its delivery operation, no? So sa insurance pa lang kumikita na siya and how they treat those insurance expense, no? Okay. So we will continue with our discussions sa Monday, and then i-discuss na rin natin kung ano yung findings, no? And paano naging Sham yung transactions niya, and then paano siya or yung paano na determine yung kanyang tax liabilities. Kasi what is important in our tax cases is the tax liabilities as determined, no, sa case. Ang mga discussions natin ngayon sa mga cases natin is halos mga US companies ito, no? Kasi magaganda yung discussions nila, especially on the treatment ng mga cases, whether they are sham transactions at saka ano yung ginawa ng court to convict these violators, no? So let's continue our deductions, our discussion next week. And then sa next week, tuloy na yung ating seminar, hari. Ha? 8 na yung nagbayad. Pero how about yung ating PRC?
Yung PRC, ma'am, pending pa po wala pa nga.
Nasagot mo na yung okay. Sige. Okay. So let's continue our discussion on Monday, no, dito sa United Parcel Service of America versus the Commissioner of Internal Revenue. And then we will discuss the decision ng court, no? Kung ano yung naging decision niya dito. Although, alam naman natin dito sa summary kung ano yung mga issues and then ano yung mga naging decision ng court. But, of course, kung ano yung rationale or ano yung reason ng court in making those decisions, no? So, we will continue with our discussions, and I would like to say thank you very much po sa ating mga viewers, and let's call it a night.